Fueled by concerns about the Group of Seven economic powers' plans to set a price cap on Russian energy, oil prices jumped to $120 a barrel. However, once the details regarding the measures under consideration became known, the quotes collapsed to $215 per barrel. All the announced measures, such as a ban on insuring ships transporting Russian oil sold above a certain price, or even a complete ban on transporting Russian oil by Western tankers, seem to be purely symbolic. Russia has its own tankers. In addition, China and India, which also have a huge number of oil tankers in their fleets, are gradually becoming the top buyers of Russian energy. Marine insurance for tankers carrying Russian products is already limited. Moreover, Western insurance companies provide such services at a substantial markup. At the moment, Russia's oil and gas companies mostly choose Russian or Chinese insurers. In other words, these restrictions are likely to prove futile. Against this background, fears about possible energy shortages have somewhat eased, thus causing a drop in oil prices. However, the risk remains as long as G7 leaders are exploring ways to curb energy prices. Probably some new details regarding this issue will become clear and change the situation. Therefore, the downside potential of oil prices is still limited. Thus, the oil market may well resume its bullish run. According to the trading chart, Brent crude oil futures bounced off the mirror level of 120. Amid high speculative interest, the volume of short positions increased sharply. As a result, the asset lost about 4%. However, sellers faced the 115 mark, which acted as variable support and caused stagnation. If the price fixes below 114.50 on the 4-hour chart, Brent crude is expected to continue its decline. Until then, there is a likelihood that the asset will recoup some of its early losses. The behavior of gold also indicates that oil is likely to resume growth. When G7 leaders announced their plans to set a price cap on Russian energy, the yellow metal jumped above $1,830 per 3 ounce, but then immediately fell below $1,820. Indeed, energy poverty risks are one of the factors contributing to a global decline in the volume of gold. In this situation, countries need to ensure sufficient oil and gas reserves in advance in order to minimize potential economic losses. This makes safe haven assets less attractive. At the moment, investments in such instruments are not productive. Meanwhile, the ruble exchange rate became the main topic of a discussion among participants in the Congress of the Russian Union of Industrialists and Entrepreneurs. Businesses urged the government to take measures to weaken the national currency. However, the representatives of government and the Bank of Russia said nothing specific about it. As a result, the dollar fell below 50 rubles at some point. True, this happened after the trading session closed in the interbank market, and this clearly indicates the sentiment of market participants and their expectations of a continued rally in the ruble. Although the quotes have already returned to the level of 52 rubles per dollar, it's quite obvious that the dollar will fix below the mark of 50 rubles within the next few days, if the government and the Bank of Russia do not take urgent steps to weaken the national currency. That's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.